Okay, good morning and good afternoon, everybody. Thank you again for attending our weekly call on what are happening or what the happenings of what's happening in Washington. There's a lot of happenings there. Haven't had my coffee yet. So let's talk about obviously what happened over the weekend. In terms of, I'm gonna, Bloomberg News, Bloomberg, I think everybody knows what's happened, the assassination attempt and so forth like that. But what I want to focus on is what does it mean for the election? So, what I want to share with you just right now, let's go ahead and share my screen. I want to show the election markets, the prediction markets, and show you what's going on. So, what you have in front of you is the prediction markets. Now, I caution people all the time when it comes to the prediction markets that this is the same, in my opinion, as going to Vegas and talking about who's going to be winning on any given Sunday. Look, if we knew who was going to win on any given Sunday, nobody would actually go to Vegas and put odds on the Chicago Bears or the New York Jets, for example. But I think the same thing is playing here in the prediction markets. Now, when Saturday occurred, President Trump jumped up in this bucket right here fairly dramatically up to 200 or up to 73%. So if I click on the real-time 1-minute chart, you'll see that when it eventually loads, this is actually the daily. Let me go to the 1-month view. So you can see that there was a slight increase, but President Trump has been fairly, stuck at this like 59, 60% chance of winning the presidency, but he jumped up to one point at 73%. Now, I think that's going to moderate back down, but again, I think the general folks, and I think this is the prediction markets, not the polls, the general idea here is that President Trump, this will obviously help him in his reelection bid. Um, you know, we'll see. I mean, what I said, I actually went on the radio Saturday night and talked about this for about 30 minutes. And one of my key things, and I hate using the word blip here because unfortunately somebody did lose their life as part of this, but if markets view this as a blip and we get back to the idea of next week talking about politics, I'm doing policy and what can happen and so forth like that, I'm not exactly sure that the assassination attempt really changes much in the way of anything. But again, this is the prediction markets. I'm not exactly sure. I wouldn't put money on this, but again, I think it's important just to note what happened. So now we're going to the RNC convention, and the big question for me at the convention is who's going to be the vice president nominee. Now, I think most of the people in Washington, and again, this is Washington, most of the people in Washington feel that it's going to be Senator J.D. Vance from Ohio. Just some gossip that happened over the weekend. Just yesterday, Senator Vance was playing catch with his children in his backyard, and all of a sudden, 4 Secret Service SUVs showed up and gave him a phone. And on the other part of the line was former President Donald Trump, which is why I think a lot of people think it's going to be Senator Vance from Ohio. Now, the vice president position really doesn't have all that much when it comes to policy. So if it is Senator Vance, we're not going to do any notes on what does this mean for the campaign or the campaign trail or anything like that, or what does this mean for companies, better said. But Senator Vance, if you follow banking issues, he's actually somewhat aligned with Senator Elizabeth Warren on some of these banking issues. Very skeptical of the banking industry in particular. And so it's kind of ironic that, even though he would be President Trump's running mate if this were to occur, he actually fairly gets along with Senator Elizabeth Warren pretty well. So, it's just certainly keep in mind. But again, we're not going to run anything in terms of like companies or anything like that, just because the vice president position, as you may know, doesn't have all that much power unless the power is delegated to that by the president. And I don't think if President Trump were to win, he would delegate that much. I think it would still be a very similar to his first administration with Vice President Pence. But, with the RNC, we're going to be watching. Tonight is economic night. So if you're in the business sense, Senator Tim Scott, the chair, ranking member of the Senate Banking Committee, is speaking tonight. Governor Glenn Youngkin of Virginia is not testifying. I haven't had my coffee today. I'm sorry about that. Is speaking tonight. And then we've also heard that Nikki Haley was invited by President Trump over the weekend to give a speech as well. And then this would culminate on Thursday night with President Trump giving his speech. Now, Bloomberg News is reporting at the moment that he's rewriting his speech. Everybody's been told not to rewrite their speeches except for President Trump. and he's been told that they're going to be he's rewriting the speech for more of a unity speech. So we'll see what happens if what that speech will entail. But further not right now, that's what I'm looking at in terms of the RNC convention. Now, it goes to the other side of the equation of what happens with the President Biden campaign. So prior to the assassination attempt, President Biden had dug in fairly dramatically in terms of staying in the race. I think everybody saw that press conference that he had where he was asked these questions, and he said, "Look, I'm in it to win." And I think he did enough in that press conference to stave off any immediate attempts. But almost immediately after that press conference, we saw additional people, including the governor of Connecticut, calling out for President Biden to step aside. I think all that discussion is now on pause, at least through the RNC convention, and it may come back next week. But President Biden is looking more and more so like he's going to be in the nominee. I won't pull it up right now, but if those same prediction markets, if you take that into account, prior to the debate, President uh, Biden was trailing Vice President Kamala Harris on the question of who's going to be the nominee, 50 to 34. And the last time I checked, President Biden, I think, was 61-28 to Kamala Harris. And so I think the prediction markets, again, which I don't take into account, but if it's just something fun to look at, the prediction markets suggest that President Biden will be the nominee. And, again, in terms of process, I know I've said this before, if the Democrats decide to hold that virtual roll call in, I don't think it's going to be this week, but next week, if they decide to hold that virtual roll call to nominate President Biden to the Ohio ballot, in my mind, that effectively solidifies him as the nominee. So again, we'll see. But where this is all going is just today I wanted to highlight, I'm going to bring up and share my screen again. I'm going to show you something that we just put out this morning. So this is a 42-page report on the election impacts. This is something that myself, along with many other analysts, have been writing for the last few weeks and actually months. And this is really of what can you expect. Now, our key three themes for this report is tax cuts are on the table. Now, no matter who wins this year, President Biden or President Trump, the 2017 tax cuts are going to be, for the individuals, are going to expire at the end of 2025. So it doesn't matter who you are, either president, tax reform is going to be in the discussion next year. And in fact, Republicans have already started to hold meetings on what tax reform would look like if they were to win both the House and the Senate, and therefore be able to use the reconciliation process, which is what they did for the Trump-era tax cuts back in 2017, essentially bypass Democratic opposition and implement tax cuts without any filibuster or any other delay. So now I don't think either President Biden or President Trump want to extend, or sorry, let me rephrase that, want those tax cuts to expire and want to extend those. But the question is, how do you pay for it? And in this report, we look at great detail of like what would happen to the electric vehicle tax credit, what would happen to some of the other clean energy tax credits, because when you're trying to figure out how to pay for these things, and look, I'm still an optimist. I still think Congress tries to pay for these things. I mean, they may use fuzzy math to ultimately pay for these things, but I am still an optimist that they will try to pay for these things by cutting other tax credits and other types of tax incentives. And I think those clean energy tax credits as part of the IRA certainly could be part of that discussion. Next major theme is the regulatory stance could change. As you know, when you have a new president, many regulatory agencies immediately flip. The SEC and the Commodity Futures Trading Commission, for example. Now, the Fed is a little bit different. The Fed has term limits, and as you all know, Jerome Powell, his term limit is through 2025. The Vice Chairman, Mike Barr, is through 2026. So it takes time for the regulatory agencies to begin to flip. But our theme here is that with congressional legislation likely difficult to come by, look, I mean, gridlock's going to stick around no matter what. The next president is going to have to continue to pursue these regulatory rollbacks or enhancements via the regulatory process. Now, that's going to take years. It's also subject to this new federal judiciary with the Chevron deference going away and so forth like that. But in this report, we highlight which industries we think are the most impacted by that. And then finally, we want to talk about executive orders because there's a lot of headline risk here. What we would like to say to our clients when it comes to executive orders is just remember, President Trump may do a lot, but if he does, a lot of it is symbolic. It is directing agencies under the executive branch purview to implement regulatory changes, which I just said takes time, or there are parts of the government that the president is a lot more powerful, so like foreign relations, tariffs, trade, and so forth like that. So in this report, we look a little bit further down in terms of those potential executive orders. Now, the last thing I want to just talk about is the sectors to watch. I'll give you a little bit more taste of what we're thinking here. So out of the 5 sectors to watch, the first one we have is investment banks because of the Basel III endgame. I'll talk about the Basel III endgame in a minute, but the next president most likely will be the one to dictate what is the future of the Basel III endgame, and that 7 to 10% increase in CET capital CET1, or just it doesn't happen at all. Big tech, antitrust enforcement could shift. This comes from my colleague Jen Rhee. Jen will look at antitrust and will often tell you that the Biden and Trump approaches to antitrust could be somewhat similar. In fact, J.D. Vance, the vice president, potential vice president nominee, for example, called the FTC chairman Lina Khan one of the best picks that Biden has ever made. Here you have a person who's, Republican, praising one of President Biden's biggest, aggressive antitrust enforcers. So, the big tech antitrust enforcement could shift, or it could get a little bit harder. Healthcare, those Obamacare subsidies are set to expire. Congress is going to have to do something with that. It's about $25 billion hit to certain insurer revenues, so definitely keep those in mind. Manufacturers, this is where the tax discussion comes into play, because even though the corporate tax rate is going to remain the same, there's a lot of other nuggets that Andrew Silverman loves to tell me about. And look, I just let Andrew really keep this because there's so many tax nuggets. And look, you have to be a tax person. If there's any tax people on the call, God bless you. I mean, I'm just more power to you that you can really love this stuff, because I look at it and I just go, but there is a lot of tax changes that are going to come here. And then finally, electric vehicles, like I mentioned before, in terms of those tax credits at risk. So the good news is, if you want a copy of this report, just send me an email and I can send you a PDF if you don't have the terminal. If you do have a terminal, it's located at BI Laws, but again, I can send you a PDF of that. So just shoot me an email. My email is ndean10@bloomberg.net. That's N is Nathan, Dean10@bloomberg.net, and I can make sure that I can get that to you. Now, the last thing I want to talk about is Jerome Powell's testimony to the Senate Banking and House Financial Services Committee last week. And this is primarily the Basel III endgame, because Jerome Powell, when asked, how are you going to do those broad and material changes, he came out and said, we are going to repropose elements of this. Now, he didn't say he's going to repropose the rule. What they're going to do is they're going to repropose certain elements of the rule, and essentially, look, it's going to be the most important elements anyway, because the Basel III endgame is originally a 19% increase in capital requirements, and I think it's going to go down to a 7 to 10%. So obviously, that reproposal is going to be somewhat important. Now, I think that reproposal is going to come out in September. I just don't think the August, if they can get it done by the next few weeks, they get it out before the August recess. But more likely, I think it's going to come out in September. And I think that they're going to have a 60-day comment period associated with that. Now, when that comes out and that comment period ends, the Fed is going to have to go back and reanalyze those comments. And I don't think there's any chance that the Basel III endgame is going to be finalized in 2024 as a result of this. And when pressed, Chairman Powell even said that it could be, the second half of 2025. And so I don't think the Basel III endgame is going to be anywhere close to being finalized. And so, don't be surprised if President Biden wins, then this Basel III endgame is eventually finalized at the end of 2025. If President Trump wins, I foresee the acting comptroller of the currency, Michael Hsu, to step aside and a new acting comptroller to come in, and I think would actually hit the kibosh on much of this work, and I don't think the Basel III endgame would actually have much traction after that. I should also note that when Fed chairman said this, he said this is the Fed's view. And that was very important because, as you know, this is a three regulatory rule. This is the Fed, the OCC, and the FDIC. And I think if you were to give the FDIC and OCC truth serum, they would say, you know what, we don't probably need to repropose this rule. We're just going to go out and do it. But because you need all three agencies to agree, I think the Fed is essentially just saying, look, I have veto power here. You're going to do as I say. So I wouldn't be surprised. I'm not going to say this is what actually happened, but I wouldn't be surprised if the FDIC and the OCC were to go to the Fed over the next few weeks and just be like, look, I'm not agreeing to do any of this. You want to repropose the rule? I'm not agreeing to doing it. And so it just stagnates. So if the proposal doesn't come out in September, then it could be because the FDIC and the OCC aren't happy with this or aren't on board with this and trying to play more of a political game, potentially if President Biden wins re-election, say, look, President Biden, we want to do this Basel III endgame, but the Fed is the one over here trying to, cozy up with the banks. This is what they would, I'm just making up what they would say. So, if the proposal doesn't come out in September, there could be some, friction going on between the agencies. We've heard about that in the past, so I wouldn't be surprised if that's a scenario. Again, I don't think it's going to happen, but I just want to highlight that Chairman Powell was only speaking for the Fed position and not for the position of the other regulators. Now, the last thing that Powell said that I thought was worthwhile was the long-term debt proposal. This is the proposal for the regional banks, and Senator Britt from Alabama asked Jerome Powell, does this rule have to be done in the eyes of S2155? Now, back in 2018, there was this law called S2155. The acronym was actually EGRPA or something, the economic growth. I can't even tell you. Now, I could at the time, but I haven't thought of it since. But what the act did is it raised the SIFI threshold for banks from 50 billion to 250 billion and required agencies to tailor regulations appropriately to the size of that bank. Now, she asked, does the regional bank long-term debt proposal have to be done under the guise that it needs to be effectively tailored to the size? And Jerome Powell essentially just said yes. I mean, sort of insinuated as that. Now, this proposal only applies to banks that are 100 billion assets and up. So my question is, okay, then what does it mean for those banks that are between 100 billion and 250 billion? Well, one of the changes that we could see coming out is maybe they just move it up to 250 billion in terms of who's impacted. I don't think that's the case because Silicon Valley Bank was in that 100 to 250 billion dollar window, but again, there could be some further amendments that if you're looking at a bank that's 100 billion in assets, there could be a little bit less rigor or less impact than if you were, PNC, Capital One, Discover Card, et cetera, like that. So we'll see. But with that, there's a lot going on. Again, if you need a copy of that report, please let me know. If you do have any questions, I know that these calls, I go from here to here to here to here. So obviously, please feel free to reach out and give me any type of feedback you have. I would always welcome having a conversation. But I want to say thank you again for attending and have a great week. Thanks.